Good morning, folks. Trust we are doing good. Welcome to another webinar series that we've got today. Today, we'll be talking about trading with little capital, and it's a pleasure having everybody on here today. Good morning, everyone. I'm your host, Akinwale Chibike, and I'm the financial analyst and dedicator at the Good Global Markets. We've been having this type of webinars for so long, and it's just so exciting being able to hop on the meetings with you all and talk about the financial markets in general. So how was our trading on Thursday? Okay, on Tuesday, I was trading on Tuesday. The last time we had a webinar, how was trading on Tuesday? Hope it was good. Hope we did well with. Hope we were able to apply the things we learned, because it's very crucial being able to apply the things you learned. And also, I can see a lot of activities going on the Telegram group. That's so amazing. Seeing everybody talk about price, about the charts, about the financial markets in general. That's so amazing. Okay. So today we'll be talking about trading with little capital. But before we hop into trading with little capital, um I'll be discussing a few things with you all. Okay? A few things with you all. And so I'll be discussing a few things with everyone, and we'll be starting with what we offer everyone at a Good Global Market. Okay, so at a Good Global Market, we are a financial brokerage firm. We offer you access to trade the global financial markets. Access to trade the global financial markets on our platforms. We have three platforms, which is the first one is MT4, where you can trade global financial markets in dollars. We have the cloud trade, where you can trade global financial markets in naira, and we have the copy trade platform, where we can trade or copy consistently profitable traders. We just mirror their trades automatically and earn the same way they earn in the financial markets. Okay, so those are the platforms we offer you at global markets to be able to be financially free. Okay, and yes, plus I tell everybody this: we have the best education in the industry. Okay, I'm not trying to brag or cap on what we do at global markets, but everyone on the sessions, or everybody that have been attending the sessions consistently, can boldly say that to any other friend they have that is trading with any other broker, that Eagle Global Markets offers the best platforms, the best education that gets you started with trading the financial markets. And also, we have a lot of other products coming on soon, and we'll be sharing it with everybody. I'll be taking you classes on how to be able to capitalize and capture on those products. Okay, so um, let's talk before we hop into today's session. Let's talk. How has trading been? How has trading? I actually want to get everybody view on how trading has been. But before we proceed, the rule of thumb: the chat section is for conversations. The question section is to ask me questions. The poll section is to respond honestly to questions I ask you. Okay, just click on yes or no or maybe if the options are there. Okay, so talk to me. How has trading been? How has trading been? Has it been hectic? Has it been good? Are you having a few difficulties you want me to talk about before we open to class? Or do you have questions about the financial markets? Things that are bothering you, possibly price always hitting your stop loss before going to your take profits? Those type of questions that actually baffles you. Have you got any of those things at all? Let's drop it in the chat box. Let's converse before we talk about trading with little capital. Okay, let's converse on that. So I'll be waiting for responses. I'll give that 5 minutes. And if nobody wants to share anything and they want to keep it to themselves, no problem at all. You can always reach out to me personally on Telegram. I will give a proper response also. Okay, so anybody willing to share any question based on the last class? Can anyone remind me what we discussed in the last session? Okay, can anyone remind me what we discussed in the last session and what you learned from the last session? Okay, what we discussed in the last session and what you learned from the last session. Okay, so what did we discuss in the last session? Anybody at all? Anybody at all? What we discussed in the last session? Anybody? indicators. Okay, brilliant, 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 brilliant. And can anyone tell us five profitable trading tools? They got exactly five profitable trading indicators. Okay, so can anyone tell me some of the indicators we talked about? I know the indicators I spoke about. I know the indicators. I even explained how to use them, how to capitalize on them, how to be able to add it using support and resistance. Can anyone tell me some of those indicators we talked about? Don't guess. If you don't know it, there is no need for you to give a response. Okay. If you talk about an indicator I didn't talk about, I will know because okay, RSI, the MACD, fractals, moving averages, stochastic, brilliant, brilliant, brilliant. Those are the five indicators I talked about, and I gave reasons for picking them. I gave reasons on how to use them. Like we said, the RSI, the MACD, and the Stoch, they helps in giving divergences about price. Divergences are just smart money techniques, a certain level of smart money techniques that give you a sign of possible reversal or change in trend in direction. Also, they let you know overbought and oversold region. And I said also indicators lag a lot, and you can actually use them as a confluence, as an added means of confluence to price action, possibly by adding support and resistance or any trading technique you know about. Okay, I'm talking about fractals. I said it's used to mark out swing points in price, where you can easily understand where to draw your fibs or if price will be breaking a significant area of structure. Those type of things I explained about fractals. And moving averages, I said they helps in knowing trend direction. And there's a lot of moving averages we spoke about majorly, but the two I use mostly is the 9 and 18 moving average. And I give reasons with the 50 moving average also if I'm trading gold. And that helps us understand how to capitalize on moves that happen on gold. The 18 and 9 helps us to be able to trade during sessions on the 15 minutes time frame. Once we understand the daily directional bias on the daily time frame, we'll understand what we will be looking for on the 15 minutes and the 1 hour time frame, which is if it's up, it's buying opportunities. If it's down, it's selling opportunities. These are the things we've discussed in previous sessions that all sums up under the indicator session that we had on Tuesday. And like I say, practice makes perfect. You want to be profitable, you don't want to be a professional. Okay, profitability keeps you way ahead. Some professionals are not even profitable. Okay, that's one simple truth about financial markets. And you want to be able to accumulate profits, make profits from the financial markets. You want to be able to make a lot of money. Okay, I told you guys it's a $6.6 trillion market. $6.6 trillion market. Nobody's holding you back from making money in the financial markets. Nobody at all is holding you back. You can make as much as you want, and also be able to curtail your greed, because greed is another thing in the financial markets. I told you guys something that happened to me last week, right? I was trying to test out this new technique, aggressive technique of trading, and I made a lot of money from my $100 deposit. I was able to take the $100 to $500. I didn't want to share the value last week, but yes, the truth is I took the $100 to $500 in 2 trading days, and yes, it happened. I lost the whole $400 profit, and I was only able to walk out of the market with my $100 balance. And I told you guys, trading aggressively works for some people and it doesn't work for some people. You have to look for a method that suits you, a style that suits you. Some trade BTMM, ICT, SMC, pure price action, and it works for them. Some just trades indicators and it works for them. Yeah, it's not really. I my plan was majorly to test out a trading approach with that money. So I was like, I was already ready to lose the money, but I made money, and the approach worked. That was the thing. The approach worked. What made me really lose money was after hitting the initial target, I tried to like, okay, do it again. I wanted to rinse and repeat. Okay, since it's 500 now, let's rinse and repeat and take it to $1,000, and that was the problem there. Okay, that was the problem there. So it's not because of the approach wasn't working. The approach was working, but what happened was the fact I tried rinsing and repeating because of my emotions came into play. Okay, that was the major thing. That was the major thing. And like I tell you guys, you don't want to trade when you are not in a good emotion. You don't want to trade when you are in an overexcited emotion. You make mistakes in both. Just be neutral to the markets. Come in neutral to the markets, and you see what the market has to offer for you. Okay, what the market has to give you. You'd see all of that. Okay, so yes, to today's topic, trading with little capital. Okay, trading with little capital. Now, most people complain capital is the problem when trading. The good side is when you give them big capital, they are happy. The bad side is when they get that big capital, they mess it up. So is capital really the problem? Okay, so to the slide right now, you learn about trading capital. What is capital in trading? Should the trading capital be big or small? Does it really matter? Advantages and disadvantages of small trading capital. Growing your small trading capital, then conclusion. Okay, so we'll be going through everything one by one, and at the end of the session, I want to bring this back by bringing people on to talk, share their experience when it comes to small trading capital, how it felt, how they felt. Did it work out properly, did it not work out properly, and also possibly to analyze a few financial instruments, two maybe or one, and we call it a day. That will be for the conclusion part. Okay, so what is capital in trading? Can anybody enlighten everyone on that? Okay, let's share our views in the chat box. I always like when we share our views in the chat box, so I don't seem like I know it all. Okay, so what really is capital in trading the financial markets? What really is capital in trading the financial markets? Can anyone tell me what their thoughts on capital in the financial markets is? Okay, capital is the money. Capital is like a ticket that allows you through the financial markets. I love those definition. Capital is the money to make more money. Capital is the ticket that allows you trade the financial markets. Yes, brilliant stuff. I'm waiting for more thoughts. Okay, more thoughts on what you think capital is in the financial markets. Money you start with. Money you start what with? You need to be more specific, Sean. You need to be more specific. Money you start with. I can start with what? Or with what exactly? Okay. Now relating to trading, common sense would make me know that money to start trading with, right? Right? Is that correct? Money to start trading with. Exactly, to your initial trading money. Brilliant. Anybody else? I really don't want us to just spend much time sharing our view. Okay, now what is capital? Okay, Yeps is typing. Um, okay, let's just wait for what he has to say on what capital is in trading, and we move to my thought. Okay, now my every single definition or idea I share about the financial market is based on popular opinion, not my opinion personally. Okay, I try as much as possible to do a lot of research and review before I choose a certain topic, and before I choose the content of the topic, so as not to contradict whatever it is you've studied before. Although there might be slight differences, but we are all heading to the same destination. Okay, money you're willing to risk. I love that. Yeah, I love that. Money you are willing to risk. Brilliant. Very brilliant. Is the money one used in trading or separated for business purposes? Okay, trading is a business. So capital is separated for trading to trade the financial markets. Okay. So what is capital in trading? Let's use a life example to explain this. Okay. To start up a business, you need money. Okay. So let's take for instance, you want to start up a trading center. Okay, a trading where people can come and just log into the broker and trade. Okay, you want to start up a trading center. What will you be needing in a trading center? You'll be needing a good, a fast, and a reliable internet connection. You'll be needing laptops or computers. and you'll be needing a screen, a big screen that can actually be used to view news from Bloomberg or CNBC, and you'll be needing a secretary, also possibly a trainer that can walk people through. Okay, this trading decision you're about to make is not good. That kind of stuff, right? You'll be needing all of those things. But what do you need to execute all of those things? You need money. Okay, money is the capital. Okay, I don't want to use the word capital, but money to start up. Okay, now what is capital in trading? Okay, capital in trading is the money you want to use to trade, and that money, you should know that you are so much liable to losing it. Okay, so capital is, I'll have to go with EF's definition this time. Okay, I'll have to go with EF's definition this time. And capital is the money you're willing to lose. Okay, money you're risking and you're willing to lose. Okay, because losses are inevitable in the financial markets. I will let that be known to you. Losses are inevitable in the financial market, but the idea is lesser losses, greater profits. Okay, if you're willing to risk one to lose one, you should be willing to make two and above. Okay, so capital in trading is basically the money you use to start trading and the money you're willing to lose, you're willing to risk. Okay, so basically that's what capital is in the financial markets. Does everybody understand? Yes or no? Does everybody understand? Yes or no? I want honest response. If you don't understand, say no. I would explain again. If you do understand, say yes. I'm waiting for more response. More response. Okay. Brilliant, brilliant, brilliant. That's so amazing. Getting a lot of response and seeing everybody understands. Now, should a trading capital be big or small? What is your thought on that? Your thoughts on trading capital? Do you think it should be big, or do you think it should be small? Or do you think it should be average? Okay. Okay, Basi. No, that's not what I mean. That's not what it means. Okay. That's not what it means. What it basically means is this money you are starting out with, just like in business. Okay. Let me quickly break it down to Basi. Okay. I think he's getting the whole concept mixed up. Okay. Basi, what it basically means is if you okay, as an Igbo man, I'll use the Nigerian terms now. As an Igbo man, an Igbo man understands that if he's shipping a good from China to down to Nigeria, there is a chance that the goods might sink. Okay. Now let's bring that concept to the financial markets. When you're trading the financial markets, you should trade with money you are okay or comfortable with losing, because you might make a mistake in the financial market and you lose all your money. Okay. Sometimes you might not lose all your money, you might lose a part of your money. But with good risk management and good trading approach, you'll be able to make every single dime back. That's the same way it is with when an Igbo man ships a good from China down to Nigeria. With good planning, the goods will come to Nigeria. Some might have spoiled or ruined, but the rest, if he sells them at the right price, he's going to gain back his capital and a little bit of profit. So that's the idea there. Okay, not necessarily big or small from Uluwashim. Big is better. Small, you can grow it with time. Depends on the business. One can start small and later make it big. Okay, I love all those views about capital, but Should the trading capital be big or small? That answer, the answer to that question is rhetorical. Okay, it's rhetorical. Some people prefer big capital. I prefer big capital. Some people prefer small capital. I prefer small capital. Okay, now it all comes down to your capacity and the goals you want from the financial market. That's very, very, very brilliant. That's very, very, very brilliant. It all depends on how much you can afford. It all depends on what you are comfortable with. If you are comfortable trading a big capital, fund your trading account with 100,000 naira and above, because it increases your profit potential. I don't want to start talking about the advantage right now. If you feel you are not too good at trading, you can start with a medium capital of 50,000 naira. Okay. If you think you can't, you want to still learn, okay, any money you fund now is for learning, to be able to understand the process, to be able to understand the platform, to be able to understand how the market works. Fund 25K and start with that. Truth be told, if you keep a stern focus on that, you will be able to scale your account at a very slow and steady rate. Now, whenever I talk to my clients, okay, whenever I talk to you guys on the phone, I've spoken to Kelechi multiple times, I've spoken to Ajus multiple times, I've spoken to Silas multiple times on the phone. Then when they started off, okay, I used to tell them something, and I'm sure whenever they listen to me say that thing, I sound a bit stupid, but that's the truth. Okay, that's the truth. I will use this common term, okay, common term on our Instagram page. 1,000 a day, 1,000 naira a day keeps sakpa away. Okay, 1,000 naira a day keeps brokenness away. If you fund 25,000 naira, and for the next, we have 25 trading days in a month. If you are able to trade consistently for those 25 days and you make 1,000 naira daily, that is 25,000 naira plus to your account. Now, trust me, you can't make profit every day. So let's say you make profit 20 days and you lose profits for 5 days. Okay, you lose 1K 5 days, make profit 1K 20 days. That's 15,000 naira for you for that month, while just being at the comfort of your home. I know it sounds stupid. Okay, I know it sounds very, very stupid, but truth be told, that takes out from the electricity bill, that takes out from the car fueling bill, that takes out from the kids' lunch or snack bill. That is just the simple truth. If you have a small capital, that is just the simple truth. Consistency, compounding the funds gives you an edge. When you do things randomly, when you just start trading without having good knowledge, okay, it's good to get started, but get started little. Don't just I'm looking for a method to, I'm looking for a way to put it the right way. Okay, don't just start, have a basic understanding. That's why the Telegram channel is there. That is why the PDFs I drop every time on Telegram channel. See, if you repeat the same process of what I discussed, 1,000 naira daily, I think I need to come up with that challenge or something for the Telegram channel. I think we will implement it. We implement it very, very soon. Very, very soon. Okay, very, very soon. And I'll pick people I'll be working with. We'll be telling everybody how we go about it. Okay, I'll pick people I'll talk to on the Telegram. We are all clients of Eagle Global Markets on Telegram group. I think we have to get started on that challenge. Okay, we have to get started on that challenge. Now, you see, if you're able to do it consistently, 1,000 naira every day, 1,000 naira every day for the next 25 trading days, trust me. Okay, trust me on this. We are just rinsing and repeating. The small capital would grow. Imagine we do it consistently for 1 month. The next month we'll not be targeting 1,000 naira because we know we have a very good accuracy rate. And the following month we might say 2K. Okay, 2K every day. Want to make 2K every single trading day. Just time and price theory, looking for trades during Asian or London or New York session. That's just all we will be doing. So big or small, it doesn't matter. What really matters is the focus you had, your knowledge in trading, and the plan and the goals you have for that account. I see people fund 20K and they're like, I just want to risk it. No, you don't want to risk it. You want to make something out of it. I have a client, she's a female. Okay, I'm talking more about the female now because lately I see my female clients that attend my session do a lot of magic in the financial market. Like, it's not magic, it's just over time doing the same thing. She withdraws every day. She withdraws 10,000 every day, 10,000 naira every day. No, I'm not trying to lie or cap, but that's just the truth. She withdraws 10,000. And you see Debbie on the Telegram channel. You see how Debbie plays trades and like it's fire. The entries are snipers. They are precise. They result 85% of the time in profits. And that is just with small capital or big capital. Okay, so let's go to advantages and disadvantages of small trading capital. But before I proceed, do you not understand that big or small capital, you can make money from the financial markets? Do we understand that? Yes or no? I'd like to get a lot of response on that. Yes or no? Do we understand that with big or small capital now, we can make profits from the financial markets? Now, let me quickly do a grouping. Okay. Small capital, I'm not talking about 5K, I'm not talking about 10K, okay? 25,000 naira minimum. That's why I consider as small capital, because that's around $50, okay? That's around $50 plus. Medium capital, I'm talking about $100 and above. Good capital, I'm talking about big now. I'm talking about $200, just because of we are all getting started, okay? Because we are all getting started. On norms, an average trading capital should not be less than $10,000. But all because we're getting started. That is the right breakdown from me to you. From me to you. And that's how you should get started. That's how you should get started. Now, advantages and disadvantages of small trading capital. Before I go to advantages and disadvantages of small capital, I sent out a poll. Please let's respond to it. I'll be sending out another poll right now. I'm sending out another poll right now. Please let's respond to it. Okay, I'm sending out two polls right now. Please let's respond to it. Thank you. Please let's respond to those polls. Honest response. Okay, honest response. I just sent out two polls. Please let's respond to it. Thank you. If you are not a client of Eagle Global Markets, you are missing out. Okay, you're missing out. All you need to do is go to access at Eagle Global Markets. .com. Okay, access at eagleglobalmarkets.com. Access at eagleglobalmarkets.com. access.eagleglobalmarkets.com. 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 If you don't have a trading account with us, okay, so please let's all set up a trading account with us and feel the financial markets. Okay, feel the financial markets, how profit can be made from the financial market, how easy it is to make profit from the financial markets. Sign up a trading account with us today. Okay, and Basi, the stream is still on. I'm still talking. I believe you can hear me. If you can hear me, please say yes. Please say yes if you can hear me. Please say yes in the chat box. If you can hear me, please say yes. Okay, please say yes. Okay, great. So, advantages and disadvantages of small trading capital. Let's start with the advantage. Share your views in the chat box. Okay, share your views in the chat box. What do you think are the advantages of small trading capital? Okay, what do you think are the advantages of small trading capital? Waiting for our views on what we think the advantages of a small trading capital is. What do we think the advantages of a small trading capital is? Okay, reduces your psychological stress. Brilliant. Chances of making bigger profits with big money and better liquidity. For small trading capital, it can help you discipline yourself with risk management. I love that risk management aspect. It helps you discipline yourself with proper risk management. You see, the most okay, let's review it first. Let's get everybody's thoughts first. Okay. Okay, I'm waiting for responses. Okay, waiting for more. I can see a lot of people typing actually. Okay, now advantages of a small trading capital. Now, a small trading capital helps you to benefit from jumping in and out of trades. Okay, that's one benefit. Now, most people don't know how to do that, but that is what a small trading capital will help you do. It will help you understand how to hop in and out of trade. Okay, because number one, you don't want to make too much profits and you don't want to make too much losses. Okay, so it will help you understand how to hop in and out of trades, like helping you shape your scalping thoughts in the right manner. That's what it's going to help you do. Another advantage is basically if you blow your account, hmm, if you blow your account, it won't be painful because it's a small capital. That's another advantage. I'm being candid with you. Imagine blowing a 100,000 naira account and blowing a 10K account. Which one will you feel more pained about? 100,000 or 10K? exactly 10K, it's going to like make you want to freak out because 10K is very small. It's literally something you can give out to someone, but 100K would hurt you real bad. Okay, to hurt you real bad. Now, another advantage of a small capital is it helps you utilize leverage properly. It helps you utilize leverage properly. It helps you utilize leverage properly in the sense that you can day trade the right way. Okay, you can day trade the right way. You can day trade it right. That's how it helps you utilize leverage properly. Okay. Another advantage is it helps you trade conservatively. You know the account is very small. You would not want to go aggressive on it. Never. You would not want to go aggressive on it. Okay. You would not want to go aggressive on it. And the last thing is yes. Okay. Kelechi, yes. It will help you understand risk management to the core. And I'll tell you the truth. You see, risk management is personal, as you said, and traders feel like risking more of their capital. Okay, even with a small capital, yes, they feel like risking more of their capital. But the truth is, if you think of your 25,000 naira account as $25,000, hmm, just have the figurative value of it being in dollars in your head. You would learn to risk just 1% of your trading account. And that is one simple truth. You would learn to risk just 1% of your trading account because the idea is you have $25,000, not 20,000, not 25,000 naira. Okay, that's the idea that will be. So if you make one naira on your cloud trade platform, you think of it as $1. That way, you know, okay, I've made 1,000 today, but deep down, you know it's in naira, but it's not in dollars. That's how it will help you shape your risk management. Okay, that's how it will help you shape your risk management, and it will be able to help you increase your risk to reward because you'll be risking one or maximum 2 to 5% of your trading account to make. If you're risking two, you'll be willing to make 4%. If you're risking five, you'll be willing to make 10% per trade. And it's very possible. If you're trading the Dow moves 100 to 300 points per day. That way, that 300 points can be equivalent to 50K for you if you manage your risks the right way, if you have a good risk to reward ratio. But if you don't, the slightest mistake can wipe your trading account out. Okay. Now, what do we think are the disadvantages of trading with small capital? Okay, let's share our thoughts on that also. Exactly. Psychology. See, I say something. I've recommended books to you guys on Telegram. Those books will teach you how they, the writers, viewed psychology, not how you will view psychology in the markets. Okay. I remember these guys that read this book, they had access to capital. They were trading $50,000, $100,000, millions of dollars then. Okay. So don't try to compare what fine, it will help you be able to understand what the market, what you should be expecting from the market, but you would have to expect it yourself. Kelechi will drop the Telegram link in the chat box. Okay. So, what do you think the disadvantages of small trading capital is? I know there's a lot of disadvantage. I know everybody has a lot of disadvantage, but let's hear it. Let's hear it. What do you think are disadvantages of a small trading capital? Okay, everybody seems to be talking about less profit. Everybody's talking about less profits. It's easy to blow your account. Less profit is not really the problem. That's true. That's very, very true. Okay. Um, the major disadvantage of trading capital is it doesn't give you space to accommodate trades, okay? Or it doesn't give you space to allow your trades break. That's one disadvantage. Okay, fine. I use a stop loss of standard 30 pips, max 30 pips. Then I use the least stop loss I have used is 5 to 3 pips. I've shared trades 5 to 3 pips on the Telegram channel. Remember when we were doing those technical analysis series where we would analyze every day and you'd see price 5 pips stop loss, 10 pips, all those stuff. We've done it in the past, and I use a standard 30 pip stop loss. Sometimes those 5 pip stop loss we hit on our trading accounts multiple times. Kelechi, Ajus, and I on those sessions, on those webinars where we're talking about technical analysis. Those 5 pip stop loss would hit on our account, but it won't hit on the markouts, and you see price just run to take profits. Now, the problem is it doesn't give you, or the major disadvantage is it doesn't give you to accommodate or give your trade space. You can't want to use a 30 pip stop loss on a 25,000 naira trading account now. That's like 25% of the account. What if your stop loss hits? It doesn't give you a chance to come back. It's fine, some people come back from those type of losses, but it's hard. It's difficult because you now have to tweak your risk management plan again. Okay, you have to start tweaking your risk management plan again, and that's one of the disadvantage. And also, it's going to be another disadvantage is it's going to be difficult for you to make rewards that are worth your time. Okay, fine. I talk about this my friend a lot. That is like a guru in the financial market. He makes he flips account for a living. Okay, he flips account. He could fund $30 today, by weekend $500, but he trades aggressively, very very aggressive. Okay, very very aggressive, and he uses a crazy leverage. Okay, so he can accommodate a lot of trades. But the idea is it won't make you it won't make you rewards that are worth your time. It won't make you rewards that are worth your time. That's one disadvantage of small trading capital. Okay. And also it will test your patience. Okay. It will test your patience multiple times. It will test small trading accounts, will test your patience. It will test your patience. It will want to sway you away from the real path. Okay. It will want to sway you away from the real path. And yes, another disadvantage of a small trading account is greed. It lets you become greedy, or it shapes you into becoming a greedy trader. If your plan was to catch 20 pips every day, because you know 20 pips is not worthwhile your time, you start aiming for 30 pips. That's greediness. You're swaying away from your goals, your profit targets. So those are like the major advantages and disadvantages of a small trading capital. Okay, are we all clear on that? Yes or no? On the disadvantages of a small trading capital. Okay, I'd like to get a lot of response to know everybody is following. And also, I'd like for us to respond to the polls. Thank you. Please do respond to the polls. Okay, now growing your small trading capital. Do you think growing a small trading capital is easy? Yes or no? Let's start with that one. Do you think growing a small trading capital is easy? Do you think growing a small trading capital is easy? Some said yes. Yes. Some are saying no. Wow. Wow. We're having a tie. Now, Kelechi just said the truth. Depending on your level of expertise and your trading approach, win to loss rate. Okay. But still, it's not even about the strategy win to loss rate. If I tell you that my trading strategy has a 25% accuracy rate, you would not believe. I trade smart money concept, yes, but I have a 25% accuracy rate. And I'll tell you something interesting. Exactly, not easy. I don't listen to Forex YouTubers, okay? I don't listen to Forex YouTubers. I don't listen to Forex YouTubers at all. Those guys, they 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 just preach the gospel of the financial markets the wrong way. Okay. Now, growing a small trading account is easy. Growing a small trading account is not easy. Okay. It's easy. You have a lot of advantages. It's not easy because of the disadvantages. And growing a small trading account is based on your level of expertise and your win to loss rate. Now, my level of expertise, I am at that I'm at that phase I like. Let's just put it that way. I'm at that phase I like. And my trading approach has a 25% accuracy rate. You'll be wondering, 25% accuracy rate, how do I make money? I make money because I'm conservative. I don't trade every time. I have strict rules. I swing majorly. I'm not in the markets every single day, every single now and then. That's why you see I share setups about the financial market once in a while on the Telegram group. That's when I see something I like GU now. Yes, I liked it. I'll only be trading EU though, but GU I won't. DXY, I just want to understand what it will be doing to GU and EU. That's strictly why. Now, having a 25% accuracy rate doesn't make me a bad trader. Doesn't make me a unprofessional. Doesn't make me unprofitable. Okay, it just helps me understand that I don't need to be in the financial market every time. That's why my RR are always wild. Okay, let's just say wild. Okay, my risk to reward ratio are always wild. That's the way I'll put it. Because I don't need to be in the market every time. I only look for certain opportunities, and when I get those opportunities, the markets pay for it. Okay, the markets pay for it. Exactly, 25%. I take 1 to 2 trades or 3 trades in a week with a 1 to 5 risk to reward ratio, making 5 to 20% of my trading accounts. Not even in a week, let's say in a month. I taught you guys a simple approach that can make you 46% or 36% of your trading accounts in a month. When we were talking about trading during sessions, yes or no? Did I teach you that approach or not? I want to know those that remember. I want to know those that doesn't remember, and those that don't even, that forget to go and start checking the books. I taught you simple method, which was accumulation, manipulation, and distribution. I'll go to my chart now. I'll point it out to you. Accumulation, manipulation, and distribution happening every single time of the day. I'll show you based on the moving averages strategy I taught you on how you can grow your account, small account. And New York Q zone and London Q zone, that was just what I explained. And I told you, once you understand the daily directional bias using the 9 and 18 moving average, you know it's going to go down for the next 20 days. All you need to do is go to the 15 minutes time frame, look for an accumulation, a manipulation to the upside, and just once it goes up, sell. Anytime it goes up, sell. That's all you need to be doing. But nobody applies it because it is not complex. Most people think strategies are meant to be complex. No, strategies are not meant to be complex at all. See, strategies are meant to be like A, B, C. Okay, strategies are meant to be A, B, C. Simple to the core. But everybody wants something that is complex. See me mark out, draw this, draw that. Everybody wants to trade. Like, no, no, no. It's meant to be easy. Okay, it's meant to. So growing your small trading capital. Okay, growing your small trading. I'm talking about how to grow your small trading capital. And the first thing is keeping your capital at work. You have to be conservative. Okay, you have to be conservative. A bit of conservative and a bit of aggressiveness. That's what you have to apply when you want to grow your small account. That means 80 to 100% of your capital must be at work all the times when you're trading a smaller account. That doesn't mean you have to be overly aggressive. Just try to understand me. It just means you have to be focused on growing your account rather than worrying about your account. Okay, the more you worry about your trading account, the more you have that chance of losing your capital. If you worry, I don't want to lose this money, I don't want, you will end up losing it. But when you don't worry and you are more concerned about growing your trading account, trust me, trust me, when you worry less, you have that higher chance of growing your account. Okay, you have that higher chance of growing your account. You have that higher chance of growing your account. The top side of growing your account. When you worry, you don't worry at all. You just keep your capital at work. You don't worry. You don't think, how will I protect my capital? Just you want to grow it. You see your account grow. Second thing is you should be looking to swing trades more than scalp trades. Okay. Now I know you might not like that idea of swinging trade because you're not calm. You don't want this, you don't want that. But the truth is, you might have to opt to swing trade. You have to be able or comfortable to swing trades than scalp trade. Be comfortable. I repeat, be comfortable with swinging trades than wanting to scalp. Okay, swinging trades than wanting to scalp, because that way you have time to do other things. You have time to worry less. Okay, you have time to worry less. You have time to worry less. You have time to worry less. Because once you start trying to scalp, you start worrying a lot. Once you start scalping, using that as an advantage to want to trade always, trust me, you start worrying more. Okay, you start worrying, like leading to losing your capital. Leading to losing your capital. That's when you start worrying. You just my capital. I want to up on this move. I want to up on that move. I want to up on this. I want to up on that. You end up losing your capital. You end up losing your capital. So be comfortable with looking for that long-term move and capitalizing on it. Okay, be comfortable looking for that move that will give you 6 to 10% of your trading capital. That is the perfect setup you need. The perfect trading setup. It has higher probability and lesser risk. There is no, I say this thing always, there is no perfect time frame. There's no perfect time frame to use. All time frames are good. Find what suits you. I can't tell you what suits you because I'm not you. Okay. The next thing is you trade using defined risk approaches. Trust me, a trader that doesn't plan to use risk management, they will manage his risk for that trader. Okay. If you don't plan to use risk management, your risk will be managed for you. How will your risk be managed for you? By a blown account. That's the best way your risk will be managed. I have someone, he always says something. My equity is my stop loss. My equity is my stop loss. Whenever he says that, and I laugh, because every single time he says it, in the end, he ends up blowing an account. He ends up blowing an account. Your equity, don't have that mindset of your equity is your stop loss. No, have a stop loss. Have a stop loss. Have two types of stop loss, okay? The mental stop loss and the physical stop loss. The mental stop loss is, okay, if he gets here, I am done. The physical stop loss is, okay, if he gets here, I might adjust it to, if he gets here, I am done. Those are the two types of stop losses that I advise traders to use, mental and physical. Let's see it on the chart. Possibly the one on the chart is 30 pips. The one in your mind is 50 pips. 50 pips, I'm done. I'm done. Another way of growing your small account is take profit. It is not going to buy forever. It is not going to sell forever. Take profits. Take profits. Nothing. See, the truth is nothing. I mean, nothing is worse for a small account that is profit, that is in profit, going to negative. It is the biggest financial damage in the world. And I will tell you the truth, it impacts your psychology in the worst way. In the worst way. It impacts your psychology in the worst of ways. Because imagine 50 pips profit going to 20 pips negative, negative 20 pips. How do you, what do you want to say? Your greed played you, the fact that you thought it to continue buying, or there's this common saying. Is this common saying in communities? It will soon go up. It goes soon. No, that's not the idea. It's going to reverse. It can reverse on you at any time. Take profits, take partials. Just take something off the table, so you don't end up in that situation of, oh God, okay, oh God, I should have. You should have. You could, not you should. Don't be that guy. Okay, don't be that guy. Don't be that guy. You can either take profits manually or make it automated, like putting a take profit on the chart. The last but not the least is focus on discipline and patience. Leave the money out of it. I know it might be very wrong to say, but the smaller your account, the more every action you take on it is going to matter. Having a plan and sticking to it is critical. See, allowing profitable opportunities come to you. Don't chase after profitable opportunities. Okay, allow profitable opportunities come to you is very critical. What is emotionally critical is chasing opportunities and losing money in the end. You are in the financial markets to win. I'll tell you the truth. You are in the financial market. It's a win-win game for you. You know losses. You only learn. You and you win. Take a disciplined approach and give yourself the opportunity to what? To succeed. I will tell you the truth. I have seen it time and time again. Smaller accounts that follow everything that has been said here today tend to become profitable, withdrawable, larger accounts. Okay, they tend to become profitable. Those accounts tend to become profitable. They tend to become withdrawable. They tend to become larger accounts, if not more or so safe. Okay, trading in a smaller account will help you develop your trading skills and habits that will be useful when you are trading larger accounts. That will be useful when you are trading larger accounts. Okay, I would like to dive deeper into this topic, but that brings us to the end of what we'll be discussing today. So the conclusion is, you can start with any financial instrument. I advise the majors, okay? Okay? But let's just conclude and I'll answer questions. We can all ask our questions. Now, the conclusion is, small or big capital, it depends on your level of expertise. Small or big capital, it depends on how well you want to grow your trading account. Don't feel urged. Understand the process. Follow the right process. In the end, profit awaits you. Good luck and good trading. So, yes, I'm open to question now. We can all drop our questions in the question section. We can all have conversations in the chat section. And if you want to talk to me live on this call, please make sure you are in a no noise environment. Okay, I'll be inviting Kelechi now to share what he learns and experiences, also to motivate us all. Okay, Kelechi, I just sent you an invite. Please do join. Thank you. Okay, if you want to talk to me also, and everybody, you want to share your view, share your idea, want to give references, want to thank EGM or anything, just say a hi or yes, or just say pick me in the chat box. I would gladly pick you. Also, drop your questions in the question section. I will be responding to questions. Okay, so Ben says he's a new member on the live trading platform, and it will need the right pair to start with. Okay, Ben, I advise you start with the major currency pairs. Okay, ER USD, GBP USD, USD JPY, USD CAD, ER GBP, and the likes. Okay, those are the major currency pairs. You start with those ones, and further moving on, going on, you get to advance to other pairs. Okay. Okay, I'll be inviting Adjus also, but I'm waiting for Kelechi to join us. Okay, he left. He left. Okay. I'll just have to send the invite again and send it again. Let's see. Okay, he's getting ready. Thank you for accepting the invites. Okay, good morning, buddy. How are you doing?
Yeah, I'm doing fine.
Okay, how's it going? How's trading been?
Uh, Training has been fine. Has been profitable.
Brilliant, brilliant. So, anything you want to share with the house? Possibly trying to motivate people, letting them know trading is the right path. It's a process. It's a journey. It's a marathon, not a sprint. Please, the floor is yours.
Training is actually truly part of yourself.
Do you mind speaking up a bit louder?
Is it better now?
A bit louder, please.
Okay, is it better now? Can you hear me now?
Yes, yes, yes. It's better
Yeah,
now.
the forex market it is showing parts of yourself you haven't seen before or you don't even know about. Because basically, I think, as I always say, or as we always talk about, the psychological part of the major thing. It's not about the strategy or anything. Because there are people that have been in the forex market for over 5 years and they are not still profitable. And if you ask them, you see that the basic problem is fundamental psychology that they don't have. Or because for you to be able to put your psychology in check, I think it's the hardest part of being a college student. It's just the hardest part of being a college student. Yeah, so my basic advice is, as you always say, treat it a life account and learn how to train, discipline yourself, discipline your psychology, discipline your psychology. I think that is the key for every upcoming trader. But the problem is, what I don't understand is, even when I was still learning, is once you talk about discipline, most of them, it takes time. It takes them time because they actually see a trade and they'll rush into the trade and it goes against them. They now start following the trade, rushing to get in the trade, which happens over time, over time, over time. Because most of the time, you see the young traders, even though they keep telling them psychology, psychology, and they know it's psychology that is the problem. But them getting a hand of psychologists, like actually a serious problem. It's actually a serious problem. And it takes a lot of discipline, a lot of discipline. Like for example, you see in a trade and you're like, okay, let me just take this trade because of my trading strategy, my trading plan is only allotted for me to just take only a trade per day. And then you go back to the charts now and then you see other trades playing out. You like, let me just take another trade, let me just take another trade. And you now you taking that trade now, it goes against your anticipation or your prediction. See, that's basically that will affect your psychology. That will affect your psychology. So it just back to basics and facts. Psychology is the key. It's not about strategy or about the concept they are treating. It's just the psychology.
Thank you very much, Kelechi. Thank you for sharing. As you've known or as you've heard, psychology is key. You understand psychology to trading and understand it's not even about your strategy. Strategy is 10%. Risk management, psychology, and the likes are 90%. You wait most time in the financial market. The money is made from the waiting. I say this a lot. The money is made from the waiting. Once you can wait for that trade to give you the right entry trigger, the right setup, that pair to give you the right setup, trust me, you make one trade, one single candlestick can change your story. Okay, that can change your story with the right risk management plan and the right stop loss, the right take profit. Can make you up for life, and that's just it. Thank you very much, Kalichi. Thank you for your time. Okay, so Ajus and Olamide are next. I just want to go to the question. Um, read Trading in the Zone by Mark J. Douglas. Okay, Mark J. Douglas. Okay, Mark J. Douglas. You can read Trading for a Living by Dr. Alexander. Okay, by Dr. Those books are listenable and readable. They are the versions you can listen to on YouTube, and they are the versions you can read when you buy on Amazon. Okay, so I'll be inviting Ajus online to speak. Also invite to participate. Okay, I just sent you an invite now, Ajus. Please do join me. Thank you very much.
So,
Good
good
morning,
morning.
Ajus. How are you doing?
I'm doing great. How today, sir?
Fine, 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 fine. Please do
Thank
go
you, sir.
ahead. The floor is
What
yours.
I, what I want to share with my colleagues in the community is like what happened to me a day before, I think, yeah, a day before yesterday. So I was targeting, I want to be a bearish, I want to buy something, I want to sell Dow Jones. So my calculation have given me go ahead, as in I'm sure that the thing is going to go short.
Yeah.
But something came out that thwarted my effort, as in I changed my mind instead of wait. So I missed the trade that almost gave me about 150 points. So I missed the trade.
Wow.
So immediately I learned that no matter the distraction, so believe and be patient for the trade to take direction so that you
Yeah.
know exactly what you are doing. So
Exactly. Exactly.
I rush into the trade and I rush out, and the trade kick off to the direction I proposed. So I feel so bad, but on the other hand, I learned something from it. So what do I learn from it? Impatience and not sure of what you are doing.
Hmm.
So if you be patient enough and you are sure what you are doing, you will be patient to leave the money to go. So I feel it is a point of beauty to let my people know that at least let us apply patience whenever we are trading and not to be so aggressive some trading.
Yeah.
So
Yeah.
what I have. And also make sure that you wait for the candle to set to give you go ahead.
Yes.
Trade
Yes.
never a
Yes.
quit. Trade always give us a go ahead. He always give you entrance. He don't
Yeah.
just give you an entrance. So that's all I have to share. Let me not waste too much time today.
Thank you
Thank
very
you for
much, Ajus.
the good
Thank
EGM
you.
for the opportunity.
Thank you very much. Thank you. Thank you. I always say something during the old sessions we have, and what I always say is I always buy a bearish candle. I always sell a bullish candle. Now, I'm not trying to make you look confused, but if price will go up, it has to go down first. And if price will go down, it has to go up first. That's where I get the concept of buying a bearish candle and selling a bullish candle. Now, the idea of waiting is very, very key. See, being patient, knowing that this is what will happen, and waiting for execution is key. Like, these are golden, I know these are things that are underrated in the financial markets. Very, very underrated. Like, people just, it's not something I can pay attention to. It's going to go, it's going to work the same way. It's going to give the same results. But truth is, it won't give you the same results. If you don't wait, if you don't apply patience, if you don't wait for that execution trigger, don't just keep on tapping the shoot button, the buy and sell button always. No, 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 no. Wait for that trigger. wait for that entry, wait for that trigger, and you will make profits from it. Okay, you will make profits from it. So, thank you very much for your time, Ajus. Thank you very
Thank you,
much.
sir. Thank you.
Okay, so the last but not the least, okay, last but not the least person, Olamide. I'll be sending you an invite right now to join me on stage. Inviting. I sent you an invite. Please join me. Please join me on stage. Okay, so I'm waiting for you to join me on stage. I can see you are getting ready to join me on stage. Be expecting. So I promised to check two financial instruments today. Can someone drop anyone at all? Two finan or drop your financial instruments. I'll pick the one I think my mind picks. Okay, okay. So let's drop our financial instruments and just a word of advice, and also a disclaimer. all Everything I'll be saying on the financial instruments or every analysis or projection on the financial instrument is just my own thoughts, just my thoughts about the financial instruments. Do not take the trade. It's not a financial advice. You might end up losing money. Thank you. I know I always say that, but in the end, you end up making money. I know someone that does it always. Like the person comes to my inbox on the other number and says, I made profit from it. Oh. I mean, don't tell them, don't say it on the Telegram group. Oh. Don't say it on the Telegram group. Oh. I made profit from like for you, you might end up losing money. Okay, and that will be the most painful part because you've relied so much on my projections. Okay, good afternoon, Olamide. Hello, good
Good
afternoon,
day, sir.
Olamide. How are you doing?
I think you can hear me. Can you hear
Yes,
me, sir?
can.
I'm
I can
very
hear you clearly. I can hear you clearly.
fine, sir. And you?
I'm doing quite well. Please do go ahead. The floor is yours.
Thank you so much for okay, good job they're doing. Actually, yeah, a few months ago, I know nothing or little about uh, forex trading, but I've learned a lot. And even your Zulu app has really helped me to learn a lot. I know some ways about broker traders, and I've been making some gain even while I'm idle, while I'm not even actively participating in trading myself. So that's what I just want to share. I say
Thank
thank you
you.
to you.
Thank you very much. Thank you very much. You see, I said something before I started the webinar, which was even if you don't know how to trade, we have a product for you. That's copy trading, and you can see so well that Mr. Olamide has given us his thoughts on the copy trading platform and being profitable. I know Kelechi started with copy trading before he was able to grow his capital. Kelechi, please type a yes or no if I'm wrong, okay? Yes if I'm right, no if I'm wrong. Ajos also once was on the copy trading platform. I think that was how he was able to get a startup capital. Please type a yes or no if I'm wrong also. Okay, I want to be corrected also in case I'm not right. And let me check if there's someone else I know. I have a lot of clients I really don't. Silas too once was on the copy trading platform. I think I'm not really sure. I can't really pinpoint, but I think he was. Okay, so please correct me a no or yes if I'm wrong. All right. Thank you very much. Okay. Brilliant, brilliant, brilliant. So the financial instruments, I'm waiting. Someone said US Tech. Okay, I'll be checking US Tech because that is the only financial instrument that's been made mention yet. Okay, so um, I'll be sharing my chatting platform. Brilliant, brilliant. I just brilliant stuff right there. Okay. Now I'm checking US Tech. Okay, I have something on US Tech last night. Okay, I think I had something on US Tech last night. Yeah, I said it. I had something on US Tech last night. Okay, so let me just delete this and let's just let's reset this. Now I know you might be wondering I should go and start with US Tech from the daily time frame and the likes. But I'll just start from the day time frame. I won't be doing from the monthly time frame today. The reason is because of US tech is if I check from the monthly time frame and weekly time frame, it's just majorly bullish. And I might be seeing something that is very, very long term, and people might not want to buy into the idea. But um, all in all, let's just take a look from the monthly uh, time frame. Okay, so yesterday in the Telegram group, we talked about liquidity voids. We talked about fair value gaps, imbalances, and inefficient price action. Okay. Before I continue talking about NAS, US 100, um, my favorite proverb that guides me when I trade is simply stop playing it safe. Okay. Stop playing it safe. That was the favorite word. It was a word I coined up myself from actually thinking I'm playing it safe all this while. I just need to stop playing it safe. Okay. Stop playing it safe. That's the favorite word that keeps me going when trading financial markets. A lot of times in the past, I wanted to give up because it was difficult then. No guidance, trying to learn it myself and all. But here I am today. Okay. Okay. I'll drop pairs on the Telegram group. Okay. I'll just drop pairs on the Telegram group. Not on this webinar, okay, not on this webinar, but you can reach out to Matthew, you can reach out to your account manager. You can reach out to your account manager and they will gladly walk you through. Or I can send you the contact of a Zulu personnel we have in-house. I'll drop the contact for you right now. Right now. I'll drop the contacts for you right now. Let me just get the contacts. We have a Zulu personnel in-house, and you can you can you can reach out to the person, just tell him the financial analyst told you to reach out to him to walk you through on Zulu. Okay. I'm dropping the contact right now in your response for your question, or in the response for your question. Okay. Um okay, there you go. His name is Johnson. Reach out to him. He would gladly walk you through on Zulu. Okay. He'll gladly walk you through on Zulu. Now we can basically say that we can basically talk about NAS right now. Okay. So talking about fair value gaps and liquidity void yesterday. Talking about liquidity voids and fair value gaps yesterday. This is a liquidity void right here. Okay. This is a liquidity void right here. So I said if I am to be talking about the NAS from a higher time frame perspective, I'll be seeing a lot of things, okay? And this is one thing I was trying to avoid. I want to give us a bias, a short-term bias, not a long-term bias. There's a very, very huge tendency that one day you'll get a big financial report in the financial markets and you just see NAS come back to the 8K to 6K level, yeah, before looking for higher prices. Don't say it's not possible, okay? During Corona, we had a major dump from 9K to 6K. The same thing can happen again, but it's going to happen in bits, okay? But let's just capitalize on the short-term perspective, which is we can see NAS, that's US tech, already broke an all-time high, okay? And we can see an order block at 13K to 12K region, okay? So when all-time highs break, there is no resistance anymore. So price is floating free, okay? And floating free means we can just see a dump, like someone, a big bank can decide to just dump the Dow massively, and well, retail traders will lose money. Okay, so this is another order block in the weekly time frame. Trying to mark them out in time of order. Okay, so we have a liquidity void right here, and we have an old low right here. Okay, an old low right here. We have a liquidity void right there and on an old low right there. Okay, so um that's an old low right there, which basically is telling me that price has business there. Okay, price has business there. Okay, price has reasons to come down there. So on the daily time frame now, I might be deleting the weekly and the daily and the monthly order blocks. Okay, and I'll be focusing on the daily order block, which is this one. Even though all these voids were filled, I might come back or decide to use this one right here. Okay. Then delete this one. Okay. So now if we are to look at price properly from the daily time frame now, I'm coming. Okay, so if we were to look at price properly from the daily time frame, we can see that price is actually giving some sort of price divergence here. Okay, price divergence here. If I add the RSI or the whichever tool I want to add, you see a divergence here. Okay, divergence here, which is basically telling us that okay, price might trade lower soon. Okay, price might trade lower soon, and also we have an old low right here, which basically is acting as a trend line phantom, but I won't be talking about that today. So on the daily time frame now, I want to on daily time frame, still on daily time frame, I want to get the RSI out. I'll talk about the RSI. Okay, RSI. Like I said, there is a divergence. There's a divergence. There's a divergence there. Okay, there's a divergence there that we can capitalize on. There's a divergence in price right here that we can capitalize on. This is it right here. The RSI, which is an oscillator, as we discussed on Tuesday, is creating a series of lower highs, and price is creating a series of higher highs. This is just telling me that soon, soon, price is going to drop, and it's not going to be funny. Okay, I'm just giving everybody a heads up right now. Price is going to drop, so I don't need to see this anymore on my chart. I just want to understand that there's a divergence there. I'll answer all questions. I'll answer all questions. Now to the 4-hour time frame now, where I want to do the work. Okay, so I have my targets on the red lines. Okay, these are my targets. That's TP1, TP2. Then TP3 is the gray area you're seeing on the chart. So I hope everyone can see my screen. Sorry, I would respond to all questions. I would respond to all questions. Let me just break down US tech. Okay, so this is an area of this is a buy area I'll be looking at, that order block right there, and try to reduce this. Now, like I said, on the 4-hour time frame now, I already have my targets from the daily time frame. Okay, so it's going to be a big ride down, and I'm ready for the ride. You hope you are ready also. So let's just now, if we pay close attention here, we have okay, price creating series of higher highs and higher lows. Okay, but price failed to create. Now look at this. This was an old high. Okay, price took out stops there and failed to create a higher high. So we have a SMS shifting market structure right here. Having a shifting market structure just lets us know that price might be trading down soon, and also we have a breaking market structure right here. I've explained these things multiple times, and it's not new. So where will I be looking to sell? Okay, I'll be looking to sell in this week right here, inside that week area right there, because there will be an order block there on the 1-hour time frame. I've not checked, but I believe so. Okay, there's no order block there, but we have an origin right there, okay, or a source, whichever one. You have a source right there. And if we go down to like the 15 minutes time frame, yes, like I said, we have something right there, okay. And that is it right there. So back to the 1 hour time frame now. If I put my fibs on this, this is price looking to go into discounted, sorry, premium area, and premium. I need to see price coming to this blue area, okay. I need to see price coming to the blue area first. I need to see price coming to that blue area, okay. So if price does come into that blue area, I'll be looking for selling opportunities, and that blue area with that box should be a significant fib level, okay. Should be a significant Fibonacci level. Let's see. Yes, the 79.0% fib level. So let's see the US tech, that's tech 100, go up this way before coming down. So short-term target to be 1488876 for the taking. Then long-term target to be this red line and that gray line right there. So that's just my bias on US tech, and I hope it resonates around you. Okay. Zulu Trade, like I said before beginning the webinar, it's a platform where you can copy trade. Okay. You can copy the trades of consistently profitable traders. I shared a number with Matthew. I'm not sure if you can see Matthew's question, but I'll just give you the person's number. Reach out to the person, tell the person want to know more about Zulu, and they will walk you through on it. Okay. So since that was the only financial instrument made mention of, and like we can see on the charts, we'll be looking for a buy to sell model, buy higher, then we sell from that region right there. Let's all just calmly wait for the trade idea to build up, then we can capitalize on it. So let me just take a screenshot of this and send it to the Telegram group. And send it to the Telegram group. So I want to send it to the Telegram group. And okay, great. Sent it to the Telegram group, and that being the only financial instrument we talked about, let's go back to the slide and let's conclude. So it was a pleasure speaking to you all on growing a small account. It was a very, very big pleasure speaking to everyone on growing a small account. And yes, I hope to see you in the next webinar, which is next week, Tuesday. Good luck and good trading. I remain your host, Akinwale Chibuike.